What is the market telling me this week? This is the Nick Rutherford Report, and this is the place to be where we're watching the market because Wall Street and the market always wants to take advantage of you, and I want to take advantage of the market, and I'm going to do that by letting the market tell me what to do. So hit that like button, subscribe to this channel, share this with someone who would get a lot out of it, because this is the place to be for the financial news that affects your net worth. I want to build my wealth, and I'm going to do that by watching the market and letting it tell me what to do next. Let's get to it. There's been some wild stuff going on in the market. GameStop's been up, GameStop's been down. Everyone wants to talk about it. I don't really care about it because I can't develop a thesis for it to make me money. And it certainly doesn't follow one of my core investment principles of finding something that's undervalued. So I wanted to bring it up, but I'm not really paying attention to it except if you're into like financial news drama, because that's effectively what this is. And it's all Wall Street trying to take advantage of you, and what I need to be doing is taking advantage of the market. I don't see how to do that here, so I'm not really paying attention to it. Another news article that I want to point out is that Rubio's Coastal Grill closing 48 locations in California due to the rising costs of business in the state. So they say that it's the rising cost of business, but maybe they're just doing bad business, or maybe the economy's slowing. I don't know. Why I'm pointing this out is because this goes along with the theme in the market that I'm seeing, that there's a segment of the economy that's doing great and there's a segment of the economy that's doing terrible. So I want to be invested in things that are going to do great, that I believe can continue to do great, buy them at a great price, and stay the heck away from things that are going to do bad. So let's go over to the next news article that I wanted to point out, because this is a piece of data, and I always like to look at data instead of looking at headlines. Of course, we're looking at headlines here, but I'm doing that to see if the themes are intact of what I'm watching, and I'm using data to guess what's going to happen next, or predict, or forecast, or whatever word that you want to use there to make it sound serious, or like there's something more than just a prediction behind it. But I think it's very important to remember that investing is part science and part art. And that's the art part is the prediction, the science part is the data. So let's look at the data here. The services ISM unexpectedly surges out of contraction. Well, if we look at the graph, I wouldn't really call this much of a surge, but it's printing at 53.8 above all estimates. And why I find this interesting is because here we have Wall Street, the market, just trying to take advantage of you, because you'll see articles that are great and articles that are bad. And this goes on and on. The sky's falling or the stock market's surging. They just want to get clicks and attention. So let's look at the graph here. So what's most interesting to me is you can see, if we're just eyeballing it technically, we're kind of bouncing along here sideways. It's not really surging. It's going nowhere. It's just going sideways. And you know what? I like to see that, because if the economy's just muddling sideways and investments that I can make in good sectors are continuing to go up, well, then I don't have to worry. If this was going down and the manufacturers were not buying as much stuff, that means they're not going to sell as much stuff, and it was contracting more and more, then I would be worried. But the data here is telling me not to worry. You can see on the left side of this graph how it really plunged during the plague because the economy slowed down. And here back in December of 2022, just zooming into the graph there, you can see that it also plunged, but now it's just been muddling sideways. So I'm not really too worried about the economy right here, at least right today. Now, of course, that could change at any point, and that's why you should subscribe to this channel. But let's look at some things that are more concerning. And it's not really concerning, but it's concerning, which is what I find most interesting. Because here, the number of problem banks climbs in the first quarter, according to the new FDIC report. What I find most interesting about this is it's kind of obvious now that commercial real estate could be in big trouble with everyone moving away from commercial real estate and working from home and all the changes that have happened over the last few years. But why I find this most interesting is because if banks start to fail, we're going to have an opportunity to take advantage of the market. Because it's my personal belief that money isn't a problem, because the government or the Fed can just print as much money as they want. So if a few banks start to go under, well, all it's going to do is provide me with an opportunity to buy things when everyone is panicking. I'm not buying bank stocks because they could go to zero if I pick the wrong bank and I don't really understand it. But maybe other people can take advantage of that opportunity. But I'm sure it will scare the market, and the market will go down if this happens. And that's just going to provide an opportunity for me to take advantage of it, because I don't really believe that there could be a money problem now inside the banks, because we figured that out already. Now, of course, something crazy could happen and I could be wrong, but that's the thesis that I'm operating under, just because it happened in 2008. It happened the other year with the SBV failure, if I'm remembering that right and pronouncing it right off the top of my head, the Silicon Valley Bank. And they just papered over it. And then, of course, if you were in that bank, you lost money. But the rest of the market continued to climb after freaking out. So that's what's most interesting, because something like this could provide an opportunity to take advantage of the market if you know what to do. So let's continue on. What happens next, and what am I doing about it? Well, inside the markets, if you look at the markets, here let's look at Bitcoin. Bitcoin is near its all-time high. And if you subscribe to the idea of any of the models, or past is present, or the history could predict the future, or Ray Dalio study the past to predict the future, and all the other people that have said that, typically when Bitcoin halves, it then pumps, and we are in the timing phase where it pumps. So it really would not surprise me to come back to this tomorrow or next week or 6 months from now, and Bitcoin as at 150 or 200,000 or 300,000. But it also, at the same time, it wouldn't surprise me that, because everyone thinks that, well, all right, we have another one of our 80% market crashes, and maybe Bitcoin's back at 20,000. That could happen tomorrow also. But if history is any guide, I'm expecting that Bitcoin will be higher, just because of the time frame we're in relating to the halving. And why am I bringing this up? I'm bringing this up because Wall Street is trying to take advantage of me by scaring me. Yet, assets, good assets, are going up. So Bitcoin's near an all-time high. The S&P 500 is at an all-time high. If I'm looking at it, it's not going down. We're not in a downward trend. And the market leaders are at an all-time high. Here's NVIDIA. It's leading the market. It's in an industry that's taking advantage of a lot of the secular trends right now in AI, and it's going up, up, up. Yeah, it might be expensive, but as long as it continues to go up, 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 and the market continues to get good news and AI keeps expanding, well, my prediction is the bull market will continue, at least until the data changes. And that's why we're here. We're watching the market to see if the data changes. Because what's most interesting and concerning to me is things like this. This is a graph of payrolls versus unemployment. And there's some weird thing going on here for the last 2 years where the payrolls has differed from unemployment, when usually if you look on the graph, it's like perfectly correlated. So I'm watching the jobs market very closely, because if the job market breaks, then I'm going to be concerned, and that data is going to be coming out next month, or no, this month. Now we're in the new month. So it will come out at some point. I'll have to check. I don't know off the top of my head, and it'll tell us what happened last month. Of course, it's a lagging indicator, but to me, it's the most important indicator, because one person's income is being used to buy something else, one person's salary is another person's income, and that's what literally makes the economy go. So as long as jobs are still intact and the market's going up, I'm happy. I'm not worried. The data is telling me everything is good, at least for today. Of course, I could change my mind tomorrow or next week, and that's why you want to stick around and watch the data with me, because here we have very interesting things happening, like the Bank of Canada cutting rates as expected, as this says. And why is this so interesting? Because if large economies are cutting rates while other economies like the US are maintaining it, it could present the opportunity of a crisis because the dollar could go up or other weird currency things could happen that cause dislocations in the market. And I'm not smart enough to know what they could be, but when we watch the market, I'll know when I see it. And that just continues along my trend of crazy things are happening and I need to watch the market, because if the different central banks are doing different things with the money, crazy things with the money could happen. Now, of course, I'm not saying that they will happen, but I'm saying they could happen. And that just goes along to the theme of I want some of my assets in gold. And I'm not telling you to go run out and buy gold. I'm just telling you what I'm doing as a small percentage of my portfolio. And the people that I've spoken to that are experts and that I've seen on podcasts that are super gold bulls and all of that stuff, they usually say that you want about 10% of your portfolio in gold. Now, I'm not recommending that. I'm just saying what I've heard. You can go do your research on it. But I'm bringing this up only because the theme of they're playing around with the money, and the theme is I think gold's going higher because of that. And here's an article that's just confirming that to me. Louisiana reaffirms gold in silver is legal tender. And if you've been watching this every week, you can see that I keep bringing these things up. And it's not because I'm a raging, diehard gold bull to the end of time. If I think gold is in a bubble and all my neighbors are telling me they're running out to buy gold, I'll be selling gold. All I'm doing here is looking at the market, and it's telling me what to do. It's telling me that this theme is intact and that I'm watching it. And that's why every week I'm going to watch the market and see what it tells me. Right now, it's telling me not to worry. Everything's going up. It's wiggly as it goes up, but the data still looks good. It's not time to freak out. Maybe next week it'll be time to freak out. I don't know. Until then, hit that like button, subscribe to this channel, and we're going to continue to watch the market. I'm going to let it tell me what to do. I'll see you next time. How am I using this information to protect and grow my wealth? Go to highreturnlowrisk.com.